Good evening. How are you? Glad you guys have all joined me. So it's time for a Stewardship in Motion session. I'm excited for another week. It's week 21. And so far, we spent 20 weeks talking about all kinds of things about how to build out financial systems that we can trust, how to identify behaviors that may be impacting our financial well being. And at the core of it, I'm going to go back to systems. We talked a little bit last week about multiplication. We talked about enacting reserves, where to start, how much reserves you should have. So we talked about that last week. And this week, we're going to talk a little bit more into what the reserves will make possible for you. And it's really about stability. It's fighting against financial fragility. So the ability to diversify without panicking is a big thing for a lot of people. I talk to a lot of clients and they say, Line, I like to see all my money in my account. So that's why I keep one checking account. I like to see all my dollars there. And I understand that emotionally, we like to see the accumulation. But today we're going to talk about how to diversify. And it's one of the greatest things within stewardship is stability and security. So this word fragility, it comes up a lot in different contexts. So fragility happens when your entire financial life depends on one thing continuing to go perfectly. Now, that one thing could be one job. It could be one stream, one business venture. It could be, if you're a consultant, one major client. If you're goals driven and maybe product driven, maybe it's an outcome, a sales number. But we're going to talk about how to diversify and get away from our dependence on that one thing. And for a scripture basis, we're going to use Solomon, that letter that he wrote to his son, Ecclesiastes 11, verse 2. It reads, invest in 7 ventures, yes, in 8. You do not know what disaster may come upon the land. And that sounds like it was written in the 21st century, if you ask me. And it's a concept that you hear a lot about. 7 streams of income is the foundation of building wealth. This is true, but you may not have known or heard of where this principle originated. And it is a biblical principle. And that is the purpose of the Minding Our Business Financial Network. We're here to show you how stewardship financial principles originated in the Bible, and then make that connection, make that dovetail for you so we can meet the goal. And the goal that we have for all of you is how to align your faith with your finances. We want alignment in those things. So Solomon was talking about crop failure because he lived in an agricultural society. It could have been crop failure. It could have been a trade route collapsing due to geographic circumstances or even wartime circumstances. That's something we're living in right now. All you have to bring up is the Strait of Hormuz, and you can talk exactly about a trade route collapse. So today, it's not only things like the Strait of Hormuz that is impacting our finances indirectly, because even though that's hundreds of thousands of miles away, it affects the price of the oil or gas that you buy probably weekly to fill your car to be able to get around. It affects the gas that the truck drivers and logistics people have to buy every single day to get the products to you. It affects the price. So today it's not only things like that, it's layoffs. We all have heard AI disruption, industry consolidation, right? That's when there's one major player in an industry and they begin to buy up all the smaller companies. So the threat looks different today, but the wisdom is identical. Wise stewards don't build fragile financial lives. So notice what the scripture is trying to teach us here. First, it acknowledges that there is uncertainty within our life, within our economy. You don't know what disaster may come on the land. That's the language that it uses. So wisdom is not just about growth. Wisdom is also about protection. Like I said, security is a main component of stewardship. And you have to notice the number. Solomon says a few, and then he goes to 7, And then he adds 8. That's very deliberate. Wisdom doesn't settle for comfortable. It keeps asking, where else can I reduce my exposure? Don't put everything in one place. Spread wisely, build strategically, and then you're beginning to prepare for uncertain times and circumstances that this scripture is promising will arise. So if you look at my slide here, diversification is wisdom applied to uncertainty. So let me ask you something tonight. Is there one thing in your financial life that if that changed tomorrow, you would be completely exposed? If one income stream suddenly stopped, a layoff, if one client left you because someone undercut your price, and whole industry shifted. We talk about AI and disruptions. Would your entire financial structure be just shaken to pieces? That's the question you need to ask yourself. That's a question I've asked myself multiple times. It actually led me to do something that was counterintuitive, not double down on corporate America, but decide to leave corporate America. And at this point, open 5 or 6 verticals that I have now, from property management to staffing and bookkeeping to real estate investment. You have to think about the areas that you can apply your skills, and then think about how you can diversify and begin to invest in these things in order to create financial security. So if everything depends on one stream that's currently uninterrupted, the danger in that is that you are subject to financial fragility. So when that pressure arrives, when that circumstance arrives, right, that may change everything in your life. And you've seen it. We all lived through it. Those of us who were working individuals in 2008, 2009, it exposed a lot of people's financial fragility who were not ready to lose their home, who were not ready to lose their single income. Right. And I believe we're trending towards those things today. If you look at our unemployment numbers, you're looking at socioeconomic pain, you're looking at instability, political instability. All these things are sort of creating a perfect storm. So many people have income, but very little have actual insulation. I want you to think about that. We have income, but income is not insulated. Our culture teaches concentration. I was guilty of this as a high income earner in corporate America, right? You get that one nice paycheck. It's consistent every 2 weeks. You work for that one company for decades. You have a retirement strategy. They have a retirement package for you, whether it's a 401k, 403b, a pension, stocks. There is some sort of provision that is built out. And then we latch onto that. We say it's ours, and we think that it will be there when we need it. But scripture teaches wisdom through diversification, not panic, not fear, but preparation. And this matters because life will change. Industries shift, jobs disappear, markets begin to fluctuate. And these unexpected seasons, if you were alive for 2020, no one saw that coming. That was what was referred to as a black swan event. No one knew that the whole world was going to completely stop for, depending on where you live, 2 weeks to 2 months. Preparation for these types of things is what will insulate us. And when everything is concentrated into one stream, that pressure begins to get amplified when this uncertainty or the shift happens. So like it says on this slide, the problem is not always the lack of income. Sometimes the problem is our lack of distribution of that income into things that will secure our financial future. So let's look at some solutions that we can put in place, a very simple 3-step framework. That's what I'm going to quickly go through with you. 3 quick steps that we can begin to think about and implement to give us a little more financial security and get us away from financial fragility. Step 1, again, this is our diversification principle. Step 1 is to expand. Develop multiple streams of value. Now, that's nothing new. You've heard that before, right? Get a side hustle, open a business. You're a 9 to 5 and you're 5 to 9, right? So you've heard that before on the internet. You've heard that here on YouTube and social media. But what does that actually look like? I think often when we think about it, we think about sweat equity. What additionally can I do with the rest of my hours to produce income? But it's not always a side hustle. Sometimes it's acquiring an asset. I talk a lot about cash producing real estate. That's another one. Investments, right? My son and I were talking about this earlier today, right? Actually, two of my sons. I'm lucky to have my kids all in one place for my youngest son's graduation. So we were having some dialogue earlier. My son was showing me his stock portfolio. He's only 22. And he was saying, hey, Dad, I've already moving and shaking. I bought this stock when it was like $100 and now it's $700. And he was excited. Those are the types of things you need to do to get financially secure. Investments, whether it's in paper assets such as stocks, bonds, commodities. People have different feelings about these things, but do your homework, educate yourself, find out. I talked a little bit about real estate. Business ownership, starting new verticals, maybe even acquiring an existing business instead of starting a fresh new business. As you know, businesses tend to have a 50% failure rate. So finding an existing business with existing clientele, with existing profits, and then finding a strategy or employing a strategy that you can acquire that business. Intellectual properties, there's a lot right now. I'm engaging in it with you right now. The digital marketplace, creating digital products in order to sell online. That's another one. And then just monetizing skills, whether that is, again, like me, who lend your skill out to people who have interest in those areas, or maybe you're doing it for companies. Maybe you're consulting for companies. You're not an employee, you're a consultant. And then that way you have a little bit more negotiation, a little bit more control over the types of projects you take, the type of income that you receive for said work, and also the amount of time that you invest, if that's important to you, depending on what stage of your life you're in. So you have to start thinking about expanding your value, expanding your flow and exchange. Let me be clear, what this is not, it's not chasing every single opportunity. It's not the shiny object syndrome, right? Someone talks about making money in some area and then you immediately run after it before you've done your research. You've seen if it aligns with you and your core values. We're not talking about that. This is really starting your education process. We're not talking about some random business. We're talking about starting the education process to find out what you can invest in, both time and resources, to build alternate streams of income so you're not dependent on one source. So diversification is intentionally adding one new root to that financial tree to give it some stability. So the goal is resilience. This can include, like I talked about, all these different types of investments. So multiple streams, that is what creates flexibility, so that when one stream is unstable, you can quickly pivot or leverage another stream of income or resources. Let's go into my second step here. Step 2, distribute. Don't place everything in one location. I talked about the clients and people that I've met and had exchanges and discussions with about centralizing your funds, right? Having that one checking account, everything comes out of that account because it's easy, it's simple. But remember, Ecclesiastes is clear. Invest in 7 or even 8. That is distribution. That is a 401k plus an IRA and maybe even some sort of Roth account and cash producing real estate. And so it's not an or mentality or conversation. It is an and conversation. What can you add to your existing flow of income, right? I've heard some investors and business owners talk about focusing on the main river. And once that river gets wide enough and the income is consistent enough, then you begin to branch it off into other smaller streams, right? So that there's a lot of great ways to talk about that. And you can look at the models from companies like Amazon, who started out with just books and now it's a complete marketplace, right? They started out doing one thing really well, and then they expanded on the revenue that they're producing. So a wise steward understands different asset classes behave differently. So that's why the education piece is important. Different markets move differently. You can be in one asset class and be in multiple markets, and that is diversification. I think I've talked about it on this channel. We have real estate in 4 US markets, right? So that allows us to be on the West Coast where the income is really consistent. We've got people coming and going. In the Midwest, it booms in the summer. In the winter, when there's snow on the ground, it's not as revenue generating. And then we're in the Sun Belt. And as you know, in the winter, all the snowbirds are coming down to the Sun Belt. We're booming in the wintertime. And in the summer, where it's like deathly hot, that is our trough, right? So you have these various markets that are hitting their peaks at different times. Those are the types of things you want to begin to strategize and figure out how you can incorporate a version of that diversification into your portfolio. Don't place your entire sense of security in one financial outcome, whether that's a pension, a 401k, a stock portfolio, a house that you live in. Don't put everything into one basket, because wisdom spreads the risk, right, before the pressure exposes it. So you want to spread that risk out before things start to crack and fall apart, and then they expose that your entire portfolio was not as secure as you thought it was. Now let's go into our third step, and that's develop. You really want to begin to develop a plan, develop a strategy, and most of all, develop an investor DNA. What are the investments, the types of assets that resonate with you specifically? Some people are stock people, some people are real estate people, some people are precious metal people, some people like commodities, some people like acquiring businesses, whether you look at the Cody Sanchez's of the world and other people out there, their whole thing is buying and acquiring businesses, right? So there's various strategies you can deploy. It just ties back to your personal skill set, your risk tolerance, and the types of assets that resonate with you personally. So you are having interest in them, and they're not just things that you heard other people do, and then you dump your money in it without actually being interested and educated on the asset. This is really important. Diversification is not about rushing. It's about layering. One healthy stream, like I talk about, or maybe it's that river, you get that flowing, you get it as consistent, as optimized as you can get it. And then you begin to build your skills, you build other verticals, and then you go into either other markets, or you find ways of finding services that incorporate or dovetail with the vertical that you're presently in. So it's just one investment at a time, one vertical at a time. And many people fail because they get overextended, right? And this is something I've experienced, right? I had a goal of getting to 100 doors of real estate, and that race and getting to 100 doors, sometimes you acquire things just based on availability, not based on your underwriting, not based on the profitability, not based on the strategy that you should be employing. So it's not a rush, it's not a race. But wise stewards, they build patiently, they build consistently. And if you currently have one income stream, maybe it's just the one job you have right now, I want you to begin to identify over the next week or two. I want you to begin to think about, what could it look like if I started something else, if I began to invest in something else, if I began to educate myself now on different things I could do with the resources that I have accumulated. So I'm not working myself, but maybe the money is working for you. So the first is to name it. You have to identify it and then begin to layer these things on. So just like I have here on the slide, strong financial ecosystems, they are built intentionally. They aren't built impulsively. They aren't usually built on what you heard someone else doing, and then you're just running to a party late and maybe the money has already been made. And that's typically how in investments, they call it fear of missing out. That's how a lot of people get caught up into different schemes and different unsavory investments, because they heard something, someone said they made a lot of money, they didn't do their research, they didn't do their due diligence, they didn't look at the timing of the investment, And that's where they could have made a misstep. So don't allow stories that people share with you to deter you from doing your due diligence. Final point here, I want you to ask yourself this question. If that one stream stopped tomorrow, what happens to your life? Would you still have some margin? Remember, margin is the space between where your bills and your cost of living and your income, right? It's that cushion. Would you still have options? Would you maybe have some gold you could go sell, or some silver, or a piece of real estate you could sell and buy something else, or reap some of the profits, or maybe some stock in a portfolio you could liquidate and get some revenue? Would your reserves evaporate overnight if your income stream changes? Do you have alternate income? And do you really have stability? You may have thought that corporate America job was stability, but in hindsight, if it went away tomorrow, if they gave you notice that the company went under, do you truly have stability? If everything would tighten immediately, here's a simple benchmark. Most financial advisors, they suggest a minimum of 3 streams to get through and weather major market disruptions. So I'm asking you, how many do you have today? If it's just the one job, if it's just that one source, there's no shame in that. Like I mentioned earlier, begin to educate yourself and figure out what other things could you engage and involve yourself with to build diversity in your income stream and give yourself some more stability and security in your financial life. So that was the question of the week. Are you building financial resilience? Are you building on the one stream and it's not carrying the load of your entire financial life? Because wisdom prepares before the pressure of the situation arises. So inside the Minding Our Business Academy, we walk you through building out your spending plan so you can begin to look at where your money is. We help you with the 7-account system that helps you to diversify how you hold your actual dollars. And then we also begin to educate you on different investment opportunities that you can begin engaging in to develop those streams. So if this resonated with you, come on, get engaged, go down in those comments and type streams. And then we'll send you a link to some of those lessons that we have, or even a link to the community. It is completely free to join. Come in, engage, talk with like-minded people, consume some of the content. We would love to have you. I want you to think about it. The disaster may come. It may be impending. It may not. You may get out of this thing without encountering any resistance, but I would still have a plan, because you know and I know, if you've lived long enough, there's a saying, what bad could happen, it will. I think it's something like that. People call it Murphy's Law, but God designed this world to be in seasons, right? And winter, if you look at winter, is a time that there's no growth, visible growth, right? Things begin to contract. The trees themselves lose their leaves. But now that we're in the springtime, we're seeing blooming. Our financial life is a lot like that. So prepare for that next season, because I think you know and I know that things do change. So build your resilience. And in the meantime, go Knicks. Thanks for joining us at the MOB Academy. Now stop scrolling and go mind your business.